Previous living on this channel is for educational purposes only. It is not intended as financial advice. Let's take a look at some setups for Setup Sunday. We're going to put the setup back in Setup Sunday today because we've got about 30 different charts here, all of which for the most part have an actionable setup, long-term, short-term. First half is going to be crypto. First half of the first half is going to be Bitcoin. Second half of the first half is going to be alts. And then the back half is going to be legacy. Timestamps in the video are also available. So let's get started here. In the beginning of a run for Bitcoin, I like to just, get level set, level headed here. Pick something, pick the rainbow chart, pick 2-year MA multiplier, something that takes into account previous cycle highs and lows, and just ask the question, where are we within some reasonable boundary here? This is easy now because we're at the bottom. It'll get harder in the middle, even harder closer to the top. And the hardest decision you'll have to make, ideally in 2025, will be how much, if any, to let go as we get towards the top, potentially. That is a big number up there. That's 265. We'll see how close we get. Now, we certainly didn't get too close in the previous cycle, but we also had a large exchange selling all of their BTC. So that certainly didn't help. As a reminder, this is the power law corridor created sometime in 2018, towards the end of 2018, using the previous three highs. I don't believe it's been changed or altered since then. It doesn't really matter. Again, it's just some basic path, right? So we got our bags packed. We're ready to go. And on the weekly cloud, everyone's favorite chart, everybody's talking about it. People pass me on the street. They say, hey, isn't that cloud guy? I don't turn around. I just smile. Just inside, I smile. But on the weekly chart, we are just about where you'd expect us to be as we've sort of smushed our way into the cloud. This cloud journey can be turbulent. It can be violent. We can go back down to 28.5. We can go to 42 next week. It can be wild and hairy. So this will be probably a long journey through the cloud, and we're about halfway through it already. But 42 is the level to watch for here based on the edge-to-edge move. And so far, so good. Stop loss at this point would be bottom of the cloud. So from a risk-reward perspective, taking the trade here, it's about 1, right? It's about equidistant from the top of the cloud to the bottom of the cloud based on where we are. But as a target, I like that 42 level. I like to keep that 42 level in mind. If we look at the pitchfork, which is the opposite of a crowd favorite, but I like to look at it again just to see where we're at. This is basically year-to-date price action. Pick 3 points, you get a rate of change. We get a nice little channel here. And when we're above the bullish half, you can expect more bullish things, right? And more bullish things would basically bring us to the low 40s, which again, that 42K level on the weekly cloud certainly makes a lot of sense. As a be careful, consider reducing territory. On the daily cloud, we look excellent. We have a massive Kumo breakout. Support on the daily based on the Kijun, this red line, is at 30K. That'll continue to move up slowly over time here, but in the moment and during any given bullish trend, ideally we see several retouches of the red line, the Kijun, before we roll over. Now that has not been the case this year, right? During this bullish trend, if you can call it that, each time, for the most part, we really didn't live by the Kijun. We kind of died by the Kijun. We got lucky here. This is SVB when SVB blew up that weekend. But we kind of just drifted, right? Or just cracked below each of those Kijuns, as opposed to the bear trend, which once, twice, 3 times, 4 times, 5 times, 6 times, 7 times, right? We touched that Kijun over and over and over during that downtrend. So that's what we want to see during a real deal uptrend, and it's far too early to see that in the moment. And we really haven't seen that all this year. So something to look forward to within the next couple months here would be a successful Kijun retest, because that says there is considerable bullish strength in the trend. On lower time frames, I was saying on Twitter, we are kind of painting this high and tight flag, which is what it's called. If you look at this part of the daily, when you push up as high as we have, as quick as we have, and just sort of stay there in a super tight range, that's generally referred to as a high and tight flag. Typically it's bullish, right? I think it's a tough trade up here because of everything else going on in legacy that I'll get to in the back half, but just kind of zooming in on the 4-hour, we've got Adam and Eve stuff, we've got inverted head and shoulders stuff. As long as we hold in this range, this should eventually break higher. We just really have to fade the immense bearishness going on in legacy. But I do like where this is set up. From a measured move perspective, 37 to 38 looks good. From a previous range consolidation breakout, 36 to 38 looks good. There's a yearly pivot at 38. So there's all sorts of reasons why this could still keep going. And ultimately, for me, stop loss on anything would be a new lower low here. Anything below 33. And you just got to be careful that we don't tumble all the way back to 30. While I'm on the topic of Bitcoin, for GBTC, this trade might be just about close to done. This discount started to widen out again. It's at the top of its channel. It filled the unfilled gap. And if we look at the weekly cloud, it is farther along in its edge-to-edge move. You know, this is post inverted head and shoulders breakup now. So if this does have another move in it, which it may based on the weekly cloud to 31, it probably needs to reconsolidate here. Certainly not a great looking candle last week. Potentially a shooting star in nature, but generally you don't want to see massive wicks while you're trying to make a move higher. You know, very similar to mid 2019 when it didn't quite make it. Now it didn't have ETF rumors on its side, but just something to keep in mind here. Before we talk about alts, let's mention today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of the Kraken trading experience with a one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out Kraken Pro with the link in the description of this video. And something else I failed to mention, but you will definitely see headlines about this week, is we've got a bullish 5200 cross on the daily golden cross. When we crisscross like this quickly, that is usually a great sign for continuation, in this case, bullish continuation. I'm referring to the red and the green line there in case you're confused. And just taking a quick peek at volume here on Kraken. Bitcoin still leading double tether. And, you know, we're not going to talk about that ETH volume, which is kind of sad. But for the most part, alt's doing okay, right? They aren't going nuts. They aren't going wild. It's kind of pick your winners, pick your battles here, because as a group, it's still not alt season, no matter what you want to think, right? You can look at Sol and Link and AAVE and a few others and think, yeah, this looks good. But ultimately, as a group, as an index, alt BTC, alts ain't it, chief. The good news for ETH, right? It's not going to beat anything right now, but it looks better than it has in quite some time. This daily stuff is probably some sort of continuation flag as well. It's above the daily cloud. The daily cloud doesn't tick all the boxes for an entry just yet, but it does have a bullish Kumo breakout. So if you're impatient, here is fine. If you are more conservative, then you're probably waiting for bullish Kumo twist. Now this may go back into the cloud and re-break out or just stay in the cloud forever, right? Lots of things still possible here. And knowing how ETH has moved, it's in no hurry, that's for sure. But it is leaning more bullish than it has in a while. Arguably back in this attempt at an ascending triangle eventually. Pretty sad that gold actually broke 2K before ETH has. Volume coming back slowly, just peaking above that diagonal downtrend there. But ultimately, 1990 is the level. There's a yearly pivot. There's what looks to me like a pretty decent horizontal resistance there. You know, set alerts for 1850 or less. Again, if you're looking at adding, which is not what I'm doing right now for ETH, certainly, personally, but you know, if you're an ETH maxi, I like starting to accumulate here and then adding as we go higher, and then hopefully being fully sized by 1990. Based on VPVR, that is also a big resistance level as well. From 1990, I do like basically 2700 to 3100. Again, a yearly pivot up there as well. This may come after halving. This may come closer to some ETF announcement. I don't know. But ETH doesn't exactly have a lot of juice in and of itself right now. And against BTC, continues to bleed pretty quickly here on the weekly, kind of as expected, based on where it's sat in the trend and the cloud. And ultimately, as a pair trade, I really don't like ETH BTC until it's back to the breakout level, somewhere around 036, 034, somewhere down there. And there's still no bull div here. This thing can keep cruising lower, but ultimately what I really want to see here is a massive wick plus a bull div. Then we know we're probably closer to the end of the down move on ETH BTC, and that may take a while because of whatever imbalance in ETF flows we may get on Bitcoin relative to ETH. Another way to look at that, again, with the crowd favorite pitchfork, pick these 3 points here, and based on the bottom of the top, pretty decent shot that we actually do make an attempt back to this midline here where I want to think about maybe being a hero and rotating a little bit of Bitcoin into ETH, but really not until then. I like the 1990 leverage trade on ETH as far as a breakout trade, but as far as a spot allocation, I don't want to think about that until ETH BTC is much, much lower. Let's talk about Sol, something that has had a little bit of upward momentum here. Had a nice inverted head and shoulders breakout we talked about for a couple weeks, basically from 25 to 31 rather quickly, kind of approaching the logical target for this consolidation. Now, if we zoom out, you can see even on the Sol BTC pair, this looks really good for a trend flip, potentially, right? Super early. If you're right and Sol takes off relative to BTC, which it may, I doubt it, but it may. But if you're right, you're doing quite well here. In a multi-month sense, this is some sort of ascending triangle. There's an inverted head and shoulders here. It's all sorts of fun stuff. Bullish Kumo breakout on high time frames. Looks decently okay, whatever this actual number is, I don't even know. But against BTC, Sol could have a nice little run here. I'm not betting on that necessarily, but I do have some spot allocations. If we look at the sort of zoomed out USD pair, we are in the weekly cloud. We do have a level of 139, essentially 138, whatever that is up there. And for me, this is enough of a risk reward to say, yeah, okay, let's give it a shot on the USD side of things, right? So your stop loss on this would be basically 24, 25 from a USD perspective. And you just sit there and you let it do its thing and you forget about it, right? That's what I do with my alt positions for the most part. I just forget I have them and just let them do their thing. Against ETH as well, Sol looks very strong. Again, you've got ascending triangle, you've got inverted head and shoulders, you've got all sorts of stuff that says, yes, this probably goes higher. This could be a cycle low. This could retrace to 02, whatever, and gather strength and go again. But ultimately, in the moment, Sol looks to be the stronger play. Moving on to Link, also in the weekly cloud, broke out of its multi-month range at like 12 to 14 in the near term. There's a yearly pivot at around 1341, and it still looked rather strong throughout the weekend as it sort of continues to consolidate up here. And the 50% retracement level would be $30, $30 for Link, and a cycle high, probably 85 to 100, which would be another 10x from here. So again, these are trades that I just sit on for years from a spot perspective and let them do their thing. If its stop loss for this would be essentially a new low in the range, right? 530 something, and or the middle of the range and or the top of the range, right? Depending on how conservative you want to play this. But if you're thinking, hey, 10x is possible here over the next 2 years, and you don't have to babysit this thing, it looks pretty good from a trend reversal perspective. Sure, set some alerts at 30, see how it looks, go from there, right? On lower time frames, I don't have a great read here. You've got a diag that we broke down from a little bit, but ultimately, if Bitcoin decides to go again, Link, Sol will also probably decide to make a move higher. But this is all kind of just a garbled mess to me. Link BTC also looks decently okay. Doesn't look super bullish, definitely looks neutral. And if you're on the bullish side of the equation, any one of these highs that we've made over the past 2 or 3 years here would be the next levels to watch, right? There was a pretty large falling wedge that arguably that was the cycle low, and Link is ready to do its thing. I'm not quite there relative to BTC, but it does look rather strong. Now, Link against ETH, also kind of at a key level, not really any pattern here per se, but pretty interesting horizontal level relative to ETH. There is a trade here. There's a setup as far as you take the range, you measure it higher, and this is where you'd rotate back into ETH based on any Link position that you'd have. And like I've said before, ultimately we get 2, 3, 4, 5, 6 trades out of this entire move, right? Let ETH just do nothing for the next month. Let Link go to 30, right? Which won't happen. Let Link go to 30, let ETH stay below 2K, and then rotate into ETH once Link is closer to 30, right? That's the dream. I don't think that's going to happen, but that'd be an interesting way to write up how this may happen. AAVE, the last alt that's really of note for me, looks very much ready to break out of its multi-day cloud. It's got a very similar setup that Maker had a few months back at this point. Maker had real yields essentially on its side. AAVE not so much, but from a technical perspective, I like 120, 135, somewhere in there. There's a yearly pivot at 129. And from a cycle perspective on a USD pair, AAVE looks decent as far as, look, this thing has been ranging at its lows longer than Link effectively, and that may be in the lows for AAVE. AAVE against BTC still looks pretty bearish, right? It's still in its downward channel below the cloud. It's not quite there. It doesn't look as exciting as Bitcoin. So again, this is where I play the allocation game and say, okay, again, Bitcoin, this is it. AAVE maybe later when I get bored, but right now it's a Bitcoin game, and here's AAVE relative to ETH. Looks decently okay, back in the previous range, and we'll see what moves first, AAVE or ETH. AAVE looks pretty excitable down here, whereas ETH is still, again, below 1990, kind of just dead in the moment, right? Something to watch on the AAVE side. They have some AIP, I guess you'd call it, AAVE Improvement Proposal, sorry. And if DeFi starts to pick up again a little bit, maybe the lending and borrowing side picks up a little bit, and maybe AAVE catches a bid more so than it has in recent weeks. All right, let's switch gears to Legacy. The big event of the week, definitely Fed Chair Powell press conference on Wednesday. We got some other stuff that, people are going to say matters, but ultimately it's all about him. Now, he's not going to say anything new. It's all about what he says and the questions he answers. But, he's going to say higher for longer. He's going to say we're not there yet. Things look good. He's going to say we're going to hold rates where they are, as the market basically is predicting no hike next meeting, probably no hike in December either. But we'll see what he says. We'll see what he gets asked as far as strength or weakness in the economy. He's going to say something about the GDP print, right? And it's just important to know that the meeting's on Wednesday, and we probably see volatility across all markets on that day. If you look at Bitcoin and ETH versus some legacy indices and NVIDIA and Eli Lilly, Bitcoin's done rather well. I'm super bearish NVIDIA, so I think this will actually close the gap towards the end of the year, the rest of the year here. But we've beat the pants off of everything else. We've won the Ozempic battle. We've beat ETH, Bitcoin, and Bitcoin and ETH have beaten all of the major indices, the regional bank index, TLT, anything, right? So this is a very, very good year on a year-to-date basis. And not only did we beat everything as of November, but we kind of held the lead the entire year aside from NVIDIA, which just obviously was a runaway freight train. A lot of these targets and setups and things I've looked at for many weeks, so I'll just be brief. But DXY is still ranging, which is good. We want to see this turn down. We want to see dollar weakness. Even though it's directionless here, it's not trendless here. It still looks like it has a bullish trend. You can see the TK lines starting to close, and ultimately that's what we want. We want this to quiet down a little bit, stay sideways. Maybe sell off to 103. That'll be a gift towards the end of the year if we get a bearish edge to edge here on the cloud. But the first signs of trouble would be for the DXY would be a bearish TK cross. So that definitely something I'm watching with interest this week. Otherwise, Max Payne for sure is 110 plus on DXY. TLT's had quite the journey. It's the long bond. It's basically the bedrock infrastructure of the entire world's financial system. Okay, so if this is losing value, yields are rising, and anyone holding this stuff is panicking. Okay, so anyone holding this is hoping they can hold it for the next 20 years so that they're not 50 to 60% underwater, or whatever they are. And there are still a lot of people calling for the bottom on TLT, which very well may be the case, just based on measured move of the previous consolidation pattern. It hit the 2618. To see that on a legacy instrument, unusual, especially on a bearish move like this. And I think what you want to see in the coming weeks for TLT, if you're a bull, you want to see this make some sort of inverted head and shoulders potentially, anything above 88, and you're looking good. I just think the supply-demand imbalance is going to push yields higher and push TLT lower ultimately. But we will see this week, I believe, with some auctions coming through. Gold's had quite a run for gold this year. It had quite a move, obviously, with the Middle East at war. And from a technical perspective, it certainly looks like it wants to break 2K for good this time. If it does not, I would watch for a right shoulder throughout 2024, the entire year, right? This is an extremely slow moving chart to make some sort of inverted head and shoulders. Ultimately, everyone's so focused on this cup and handle, they think they can just will it higher. And hey, that may be the case, but We've been here before with gold. We may get denied again. And if the wheels fall off the wagon for the legacy side of things here, which is looking like they want to, you may see gold sell off just like you did during COVID, at least briefly before moving higher. So yeah, this probably goes higher in our lifetime, but it's going to take a minute. S&P has continued to look angry, continued to break down, continued to really in a parabolic sense make lows and hold significant bearishness. The cloud got you out pretty significantly higher here. The edge to edge worked out. The chart pattern watch worked out, right? This is at this point a successful head and shoulders breakdown. No bull div here just yet, even though I marked this up as a potential rotate out of treasuries for me and into S&P. I'm not so sure. I don't feel brave enough to do that just yet. On the S&P, it's below the 200-day moving average as well. So ideally for Bitcoin, we either chop around in the 4,000s on the S&P or we stay uncoupled. Because if this gets ugly, eventually Bitcoin will notice. Now, it's not like the Qs look any better, but they do have potentially, this is like a pie in the sky idea, this cup and handle. The pattern gets invalidated at 329. No bull div here either. But if this breaks up, we're talking 500, 550 on the Qs. And, let's say things look bad enough and the Fed steps in and something crazy, right? If things get wacky, which I don't think they will, but if they do, that's how the Qs go higher. And this is basically the small caps IWM. And this does not look good by any means. If you look at some random chart in any sector, as I'm about to go through here, a couple different sectors, these charts look sick and unwell and ready for lows. This does not look like a chart that is happy. And if this goes back to the COVID lows, things could get really interesting across the board. Here's the NVIDIA chart. Again, head and shoulders probably goes lower. AI mania may have come to an end. I'm the brave soul to say that for the 10th time this year, but does have an unfilled gap from 314 to 350. And if you want to be a superhero and trade the NVDS ticker 1.5x short NVIDIA, that would be where I would want to trade and what I'll be looking for this week. Long time frame Amazon idea here as far as a potential inverted head and shoulders to watch over basically the next year. But where Amazon sits here on the daily, very much in neutral territory, cloud basically on its way to fully resetting. So something else to watch for on the tech side would be a mini Microsoft inverted head and shoulders as well. But because all of these, right, these are part of the Magnificent Seven, are flat, neutral, ranging, not exactly bullish, right? The entire market is basically not exactly bullish on the indices because the entire market indices are basically just the Mag 7. Now, if we look at some other stuff, okay, I hope you're sitting down. This is where things get interesting. The JETS ETF, this is airlines, effectively, okay? 91 days almost of just straight doom, right? And I think you got to ask yourself, is this a buy here? How bad could it get, right? Now, it looks pretty bad. I don't think it's a buy. I've said this before, but I prefer to buy strength over weakness. And this does not look good. If oil goes higher, maybe JETS goes lower. I don't exactly know those dynamics there. This is Delta specifically zoomed out. Also looks pretty angry and upset, ready for around 20. As good as I think airlines are doing, clearly their stocks are not holding up. This is XLE. This is the energy sector ETF. Long-term idea here as well with a potential ascending triangle breaking out at 93 with a target from 114 to 126. So I think all of these ideas have a pretty quick stop loss as far as in the near term, like what could happen. This is the commodity index, okay? Potential head and shoulders here, potential bearish rollover. If I see another orange juice chart, I'm going to puke. Same thing with olive oil and cocoa. And there's lots of crazy looking commodity charts, but as a group, this to me looks ready to roll over based on the cloud, based on the chart pattern. Regional banking ETF also does not look good, right? If things get ugly here, there aren't many supports until basically like the 2010 high, right? The COVID low, the March low, there's not a lot of supports here for regional banks. So if as a group, regional banks start to blow up, which it feels like we're almost there, this index will certainly be extremely angry. Here's one such bank, M&T Bank, something that Arthur was pointing out. Doesn't look so great. Then as we wrap up here, have you seen a better head and shoulders than this? This is the biotech ETF, XBI. I'll put all these charts in the description of the video if you're curious, but man, this does not look happy. This looks ready to break down. Maybe it retests the neckline or something, but on the monthly chart, this thing looks ready for death and doom and devastation and good night, okay? As opposed to Eli Lilly, which is, of course, the company behind Ozempic. And as a student of the markets, this is a great cloud trend, a great cloud chart. This is what we want to see. We want to see a breakout, repeated Kijun bounces, Tenkin bounces. This is what I want to see for Bitcoin in 2024 into 2025. Okay, this is exactly it. This is what we saw in 2017. Looks great. Certainly looks like it's a parabolic move at this point, so I doubt it has much left in it. And fun fact, I didn't realize Ozempic was around, or has been around since 2017. I've only started hearing about it, as a product, maybe the past year and a half, but chart has had a phenomenal run from a Kumo breakout around 50, let's say, to 560. What a move on the cloud there. Then lastly, ending on a sadder note, the ARC chart looks like that inverted head and shoulders pattern has been invalidated as we've made a lower low here. Could not hold on to 37. And honestly, this makes more sense. It's a basket full of junk. So I can't imagine this does well in the face of high rates. But hey, let's say we make another shoulder here, we get back into the weekly cloud, then this idea from 40 to 77 is back on the table. But in the moment, does not look good for ARC. So I know this one ran a little long, but it was packed with value, it was jam-packed with value. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.